Greetings. I welcome you once again to Prekani Trading Networks. And today we're going to be talking about market structure. Types of market structure. This teaching is really going to help you to understand the market structure of every market, to be able to identify which trend the market is and at what time, at what point, and which strategy is best for any of the market structure that we mentioned. So please pay attention, because this teaching is very important as for you as a trader. Remember, do not compare yourself with anyone else's progress. Always keep a winning mind frame and you will do very well in this business. My name is Anyaso Maduabuchi, also known as Mr. Possible. I am your coach for today. So do well to subscribe and turn on the notification bell so that you get notified anytime we drop new videos. Our mission here is to ensure that we teach you how to trade the right way. I don't bring any hype to this business, because hype has actually deceived a lot of people in this business. So this is why you must pay attention to everything that I will be saying and do well to ask your question when necessary. Now, what is market structure? Before I forget, in case you are interested to get your 1-year mentorship program with us at Prekani Trading Networks, you can always go to our website www.prekany.com, PRECANY.com. Now let's talk about the concept or the topic of today, the market structure. Market structure is one of the most important skills that you need as a trader. It is the ability to read the market structure. It is a critical skill that will allow you to use the right price action strategies in the right market condition. You're not going to trade all the markets the same way. You need to study how the market moves and how traders behave in the market. The market structure is the study of the market behavior. If you master these skills of understanding the market structure, you can be able to understand what I call the market sentiments of buyers and sellers using your forex chart. Listen, guys, the moment you understand market structure, you can trade any market in the world, be it crypto market, be it the forex market, be it synthetic indices, be it the stock market, be it commodities. Any kind of market in the world. Hence, you understand the concept of market structure. It is really going to guide you to make your trading decisions effectively. So if you master these skills of understanding market structure, you can be able to understand what I call the market sentiment. By understanding this concept, you will know when to enter and exit the market, when to take profit and where to keep your risks, when to trade and when to stay away from the market. Market structure is the key to trading success. Through your price action analysis, you will experience 3 types of markets, which is trending market, ranging market, and choppy market. I will start by letting us know these types of market structures and how to trade them in advanced classes. Now let's talk about the types of market structure. We have 3 types of market structure. We have the trending market, we have the ranging market, and we have the choppy market. Now, what is a trending market structure? Trending markets are simply characterized by a repeating pattern of higher highs and higher lows in an uptrending market and lower highs and lower lows in a downtrending market. All right, I'm going to show you guys on the chart. Now, what is a ranging market? Ranging markets are pretty straightforward. They are often called sideways markets because their natural nature makes them appear to drift to the right horizontally. So when the market makes a series of higher highs and higher lows, we can say that the market is trending up. But when it stops making these consecutive peaks, we say the market is ranging. So a ranging market moves in a horizontal form. All right, it moves in a horizontal form. Now let me quickly explain what I mean by that. A trending market is a market that does what? That creates a series of what? High, low, higher high, higher low, higher high, higher low, higher high. Whereas a ranging market, like I said, is a market that moves horizontally. All right, where buyers and sellers just keep knocking price back and forth between the support and the resistance. Sometimes professional traders would say that price is at equilibrium. Now, when you say equilibrium is a point of equality between the buyers and the sellers, who are the movers of the market. So a ranging market is actually a market that moves in sideways or moves horizontally. All right, it moves sideways or moves what? Horizontally. That is how it moves. Do you understand? Okay, now let's talk about a choppy market, and I'm going to show you guys the examples of these markets in the chart. Let's talk about the choppy market. A choppy market is a market without any clear direction. So this is why sometimes when traders without experience approach the market, they just want to trade, not even identifying the market structure they are trading, if it is going to be a good market structure for them or not. Do you understand it now? So a choppy market is a market without any clear direction. So a lot of newbie traders find themselves struggling in a choppy market, where you see markets moving up and down without any clear direction. Choppy market can present themselves after an extended bull or bear market has been in place. So a choppy market refers to a market condition where prices swing up and down considerably, either in the short term or for an extended period of time. A choppy market is often associated with rectangle chart patterns or volatile periods where a trend is not present or the trend is difficult to trade. Now let's talk about understanding the trending market. There are basically two types of market trends. All right. Now we have the uptrend, the downtrend, and the sideways. We have the uptrend. When you say the market is bullish, this is what we mean. Market is uptrending. When you say the market is bearish, talking about market being downtrending, markets creating series of higher highs and higher lows and lower highs and lower lows. Do you understand? And then when you say the market is sideways, or the market is at equilibrium, or you say the market is ranging, we're talking about market moving, all right, in a range or in a horizontal pattern. All right, now let's talk about the uptrend market. An uptrend describes the price movement of a financial asset when the overall direction is upward. In an uptrend, each successful peak and trough is higher than the ones found earlier in the trend. All right, so we have here, this is actually the resistance, this is the support. All right, this is the resistance, this is the support. Okay, so we buy from the low so that as price increases we make what? Profits. We buy from the lows. All right, as price increases we make profits. So this is actually how to approach an uptrend market. And the downtrend market, we sell from the highs. As price, all right, increases, we sell, we make money. So in forex market, you make money both ways. You can make money buying and you can also make money selling. Do you understand? So as we proceed in our advanced classes, you're going to understand the concept behind the notion of buying and selling. Because most persons feels like, when I sell, how then am I going to make money in a downtrending market? Do you understand? And some persons would understand that, okay, it's fine when I buy and the market goes higher. All right, yeah, I'm supposed to make money. So when the market is downtrending, how do I then sell and make money too? So this is what I'm going to explain in the future. For now, this is just the basic aspect of these things, so that you need to understand it very well. So when people are talking about finance, when people are talking about international markets, all right, when people are making comments about the global economy, you can be able to understand what they are talking about just by using market structures. All right, so let's talk about the downtrend market. A downtrend refers to the price action of a security that moves lower in price as it fluctuates over time. Okay, then we'll talk about the sideways market. The sideways market, like I said, this is the sideways market here. All right, like I said, a sideways market trends in a horizontal pattern. All right, it occurs when the forces of supply and demand are nearly equal. That was why I also mentioned it as what? Equilibrium. When you say the market is at equilibrium, it simply means both the buyers and the sellers are ranging. Okay, they are yet to decide where to push the market to, whether downtrend or whether uptrend. Is that clear? So let's move to the next slide. Now let me explain uptrend in a very clear and simple manner that you will understand. Trending markets are easy to identify. Don't try to complicate your analysis. Use your brain and see what the market is doing. If it is doing series of higher highs and higher lows, it is simply an uptrend market. All right, so this is what? A high. This is a low. This is what? Series of under higher high, because this high is higher than this high, and this low is higher than this low. That is why it's called a higher low. And this is also a high, higher than the previous high. Are you seeing it now? This high is higher than this previous high. That makes this a higher high. And this low is higher than the previous low. That makes it a higher low. So this is the series. When market is printing a higher high and a higher low, a higher high and a higher low, you can say that that is what an uptrend market. Now let's look at this place. Let's look at the chart here. For instance, you can see that the price printed a low, gave us a high, gave us a higher low. That is, this HL means higher low, and gave us a higher high, gave us another higher high here, gave us a higher low. So this, with this imprint on the screen, you can be able to see that, okay, the market is making a series of what? Higher, a high, a low, higher high, higher low, higher high, higher low, higher high. You can say that this is what? An uptrending market. As you can see in the example above, the market is making series of higher highs and higher lows, which indicates that the market is uptrending. You don't need indicators to decide if it is bullish or bearish. So when the market is in this when the market is in this state, you can say that this is what? A bullish trend. It's a bullish trend because the buyers are in charge. It is the buyers that makes market move up. All right, you can call them the bulls. It is from the word bull we got the word bullish. All right, from the word bull we got the word bullish and the word bullishness. So in a forex technical term, you could say, Mr. Possible, I noticed that the market is printing a bullish trend. I understand that all you mean is that the market is in an uptrend market structure. Do you understand? Yes. So just with this understanding, you will know that when your chart is like this, you can be able to say that this is an uptrending market. All right. So you don't need indicators to determine which trend it is. Just by observation of price action, all right, it is quite enough to get an idea about the market trend. According to statistics, trends are estimated to occur 30% of the time. So while they are in motion, you've got to know how to take advantage of them to determine whether a market is trending or not. You have to use bigger time frames. Now, when you hear the word bigger time frame, we're talking about higher time frames ranging from the weekly. All right. Please, I'm going to be explaining this time frame in subsequent videos on TradingView. So just keep your eyes, keep your smartphones and your laptops ready, so that when I drop it, you're going to get the notification. Okay, so you understand what I mean by this. All right, so when you talk about higher time frame, we have the monthly time frame, we also have the weekly time frame, we have the daily time frame, we have the 4 hours time frame. So now most times we use the higher time frame to determine the trend, because the higher time frame controls the entire trend. Okay, so while they are in motion, you've got to know how to take advantage of them to determine whether a market is trending or not. You have to use bigger time frame or higher time frame, such as the 4 hours, the daily or the weekly time frame, or even the monthly time frame. Okay, so we're going to teach you how to trade and make money with this market structure. Just keep following and ensure that you go back to practice whatever I teach. Because the problem with a lot of people, and the reason why most persons don't make it in this business, is that since the forex market is a business you can do anytime you like it, a lot of people just trivialize the efforts that a lot of forex mentors have put in this space to ensure that this information goes across to you. So you just trivialize with it. You feel like by just watching the video once you understand everything that I'm saying. No, you need to watch the videos over and over again to be able to understand, and after that you apply. Okay, you take action, you apply. That is how you get better. Now let's talk about the downtrending market. Just the downtrending is just the opposite of the uptrending, where price is creating what? This is what? A lower high, and this is a lower low. This is also a lower low. Why? Because this low here is lower than the previous low. This high, this is a lower high because this high is lower than the previous high. So when you see this kind of market structure, you can be able to identify that, okay, this is what? A downtrending market structure. You can see it here from the chart that the market created what? A lower high here and created a lower low, because this low is lower than what? This previous low here. Are you seeing it now? And then this is also a low, this is also a low. Do you understand? This is a high, so that is just how to identify them. And they come in different patterns. But as long as you are seeing that the market is printing resistances, all right, or is printing a high. For instance, this market gives us a low, creates what? A high. Market comes, break that low, gives us what? A lower low. And if this high doesn't supersede this high, it means that this is what? A lower high. So you would know that this is what? A continuation of a downtrend, as long as market keeps printing lower lows and lower highs. Now the illustration above shows a downtrend market. As you can see, the best trading decision is to sell the market at the beginning of an impulsive move. All right. Now, when you hear the word impulsive move, okay, we have bullish impulsive move and bearish impulsive move. For instance, when you noticed that the market just shoots up, you can say that this is what? A bullish impulsive move. And if you notice that market shoots down or creates a very swift downtrend, you can say that the market what? Is creating a bearish impulsive moves. Is that clear now? Okay. It's just like the word bullishness, and bull. Here we refer sellers as bears, bearishness, and bearish. So when you say the trend is bearish, you're making me to understand that the market is what? A downtrend. So technically, forex traders don't just come out to say the market is a downtrend. No, we could come out to say the market is maintaining some levels of bullishness or some levels of bearishness. So I understand that, the market is actually, creating or printing downtrend, or the market is in a downtrend. Or you could say, Mr. Possible, the market is down, the market is bearish, or the market structure is bearish. I will know that you're referring to a downtrend. Or you can say, Mr. Possible, the market structure is bullish. I will know that the market, you're referring to what? Bullishness. Or you could even say, Mr. Possible, there is bearish impulsive moves in the market structure. I will know that the market is what? Printing downtrends, or the market is making downtrends. If you say there are bullish impulsive moves in the market, you are making me to understand that the market is what? Creating series of what? Bullishness. So these are some of the terms that we use to communicate with ourselves as traders, so that a layman out there will not understand. Because when you say downtrend, what comes to a layman's head is, okay, maybe the trend is down. You understand? But when you use some of these concepts, we know that you're saying it professionally, okay? Just like every field has their own terminologies they use for communication. That is the same way forex traders have their own. Do you understand that? Do you understand me now? So now we know how to identify downtrends and uptrends, and how to differentiate between an impulsive move and a retracement move. This is very important for you as a price action trader to know. But the most important question is how to identify the beginning of the impulsive move to enter the market in the right time with professional traders, and avoid being trapped by the retracement move. That you will learn in the advanced classes. Is that clear? So like I said, these are just basics to just teach you how the fundamentals of these concepts, so that you understand better. All right. So in forex trading, we always have the market structures. Okay, it's very important to know about support and resistance. So we're going to be talking about the introduction to support and resistance. Is that clear? So please just stick around. The part 2 of this video, we're going to be talking about the importance of support and resistance. That way you'll be able to understand why there are uptrends and why there are downtrends in the market. Is that clear? So just check the next video. you're going to see it where I'll be talking about the introduction to support and resistance. Thank you so much for your time, and remember, for you to be able to understand what I have thought so far, or what I have enlightened you or shared, the information I've shared with you about market structure, go back to the video, watch them over and over again, then take action. What do I mean by taking action? Get a piece of paper or get a book and a pen and make notes for yourself. Do you understand? That way you begin to understand how this thing works. Is that clear? So please stick around and expect the next video, introduction to support and resistance, where I'll begin to dissect all you need to know about price action, support and resistance. Thank you so much. My name is Anya Somodabuchi. I'll see you on the next video.